Hello everyone, welcome to my channel. In today's video, we would be learning about FEMA Foreign Exchange Management Act. This video is a part of playlist uploaded on International Trade Finance. So do check out the playlist. You can get the link to the playlist on the I button in the description box as well as at the end of this video. Now let's start with our learning session. Starting with an introduction to FEMA. FEMA as it stands for Foreign Exchange Management Act. So if you're following this playlist on trade finance, in my previous video we talked about FEDI. Now don't get confused between FEMA and FEDI as both are regulating the foreign exchange transactions, the foreign exchange market, but there is a major difference. And the major difference is that FEMA is an act which is implemented by the government, while FEDI was an association made by the foreign exchange dealers. Okay, we will be going through this slide and understand better about FEMA. But what do I mean when I call FEMA as an act? It refers to any law or legislation that has been passed by the government. Now, whenever we are referring to law or legislation, it is created to establish certain rules and regulations that necessarily need to be followed. And FEMA is called an act because it defines the legal framework, it defines the rules and regulations and the process for managing foreign exchange transactions and foreign investments in India. Now let's go through our slide and understand once. So the Foreign Exchange Management Act is an Indian law that regulates foreign investments and foreign exchange transactions. Again, keep it in mind, FEMA is an act which is passed by the government establishing rules and regulations governing foreign exchange transactions. Now, FEMA was introduced in the year 1999 and was implemented in the year 2000. It was a replacement for an earlier act which was referred as FERA, that is Foreign Exchange Regulation Act. There was amendments made, there was need for changes, and that's why FEMA came into existence. FEMA defines formalities and procedures for dealings of all foreign exchange transactions in India. These foreign exchange transactions has been classified into two categories. You must notice this. It is capital account transaction and current account transaction. Now, capital account transaction means any kind of foreign investment or loans that are happening across border. Those will be counted in capital account transaction. So, like FDI, foreign direct investment, FPI, foreign portfolio investors who are investing in Indian stock market, then ECB, which we call as external commercial borrowing, the loans between the countries. While current account transaction refers to day-to-day trade transactions like imports, exports that are happening, inward remittances, outward remittances, remittances for travel purpose, education purpose, or gift purpose across the border. Those will be counted in current account transactions. Now let's move towards the purpose of FEMA. So the first one is exchange rate stability. It aims to maintain stability in exchange rates by regulating foreign exchange transactions. Now, exchange rate stability signifies that our currency, which is Indian rupee, its value remained relatively stable in the forex market. Why should the value of currency be a bit stable and not more fluctuating? Because most of the investors, when they are investing in India, they are concerned about the high risk of the fluctuation in the market. They want a stable currency defining a consistently growing economy. So the currency stability is maintained by FEMA. FEMA regulates the foreign exchange transactions and ensures that these transactions do not lead to excessive volatility, excessive fluctuation in the market. What do I mean by volatility or fluctuation? It means changes in the value. The more the frequent changes, higher would be the risk. So there should be a bit of stability in the currency market. whenever investors are investing, they look for these kind of favorable economic environment, and thus FEMA plays a major role in maintaining that stability so that more foreign exchange transactions can be attracted in our country. Second is maintenance of foreign exchange reserves. It helps conserve India's foreign exchange reserves by regulating the inflow and outflow of foreign currency. Now, foreign exchange reserve means the foreign currencies and the foreign assets that are held by RBI and Government of India. Now, these forex reserves, they act as a safeguard against stabilizing currency, against any payment of foreign debts that are taken by the country at the time of crisis. So there should be a good amount of foreign exchange reserves maintained with the government, maintained with the RBI, so that in case of any crisis, in case of any higher fluctuations in the market, in case of any economic instability, at that time also the forex market can be run smoothly and the reserves can be used for maintaining stability in the country. Now, FEMA ensures that forex reserves are utilized efficiently whenever there is a need to meet economic and financial needs of the country. So that's how FEMA plays an important role, whether in exchange rate stability or maintaining foreign exchange reserves. Facilitating international trade. So, FEMA also facilitates international trades by allowing a regulated and smooth import and export transactions only when there is certain regulations in a country, there is certain procedure which are defined, certain guidelines that need to be followed, then only the different countries, they are also attracted in making investments in our country, because they can be assured about their money which they are investing. They can be assured about the country's economical and financial stability. Now, FEMA regulates FDI as it specifies in when we say that how does it regulates the foreign investments, how does it facilitates the international trade. So FEMA provides a legal framework for FDIs, that is foreign direct investment, and FPIs, that is foreign portfolio investment. What's the major difference? So foreign portfolio investment is the investment that is being made in the stock market of India, while FDI is a foreign company coming in India, establishing their venture, setting up their business, and then running the business and taking the profit out of it. So that's the major difference. And for both of these things, FEMA provides regulation. It specifies that in which sector the investment can be done by the foreign countries, which investment need to take prior approval from the government. Also, it keeps an eye on what transaction is happening, what the transactions must be reported to RBI, the transfer of fund and the profits which are being incurred from the profit which are being gained from those foreign business which are being established in India. Also, in case of foreign portfolio investors, FPIs, it mandates that investors must be registered with SEBI. SEBI is regulating our stock market in India. So, Securities and Exchange Board of India, it ensures that FPI must be registered with SEBI and they must comply with KYC norms. And thus, FEMA plays an important role in regulating both, whether we talk about FDI or we talk about FPI. Now, we can take an example like FDI is not allowed in any kind of gambling business. So that's also defined by FEMA, that which sector the investments can be allowed, which sectors are legal in India, which sectors are not legal, and where there should be restrictions, where there should be total exemption, should not be allowed. Preventing money laundering. FEMA plays an important role in preventing money laundering by ensuring compliances. Now, what all things is defined under FEMA is that documentation should be done properly, record keeping should be there, KYC norms should be complied, all the transactions that are happening should be monitored, should be reported, and if there is any violation of norms of FEMA, there is penalties defined for it, there are enforcements defined for it. Now, by facilitating all these things, money laundering cases are prevented. What is money laundering? It is like converting your illegal money in a legal way, and by making investments in other countries in different sources just to convert your illegal money into a legal form. And thus FEMA, by providing all these guidelines of documentation, KYC, transaction reporting, penalties, etc., tries to keep a control over these money laundering cases. Compliance with international norms. So FEMA also ensures by representing India that India's compliances should be aligned with the international norms and regulations so that a smooth forex transaction can be done, foreign exchange and investments can be made accordingly, complying with the international norms as well. Now let's come to the key provisions of FEMA. We have taken major 5 provisions, starting with the first one, that is current account. So FEMA permits most of the current account transactions to be conducted freely without significant restrictions. Now FEMA allows wide range of current account transactions, whether we talked about the import and export of goods and services, the inward and outward remittances that are done. Remittances means sending money out of the country. If you are sending money for travel purpose, if your relative is living over there in another country, you are sending them money as a part of gift, as family maintenance, or for education purpose of your child. If you are sending money for all these purposes, it would be considered as an outward remittance. In the same way, the country who is receiving those foreign currencies, it is referred as inward remittances. So FEMA allows in most of the cases all the inward and outward remittances to be done freely, specifying the different purposes for which it is used, whether family maintenance, travel, education, etc. So these transactions can be carried out through authorized dealers such as banks, and banks facilitate these transactions to be done freely without any significant restrictions. Second is capital account transaction. We already referred to capital account transactions, which includes investments that are done in foreign country, the ventures that are established in foreign countries, then the loans that are taken from the countries. So capital account transaction is impacting on the asset and liability of the country, directly impacting the asset and liability of the country. Now for that reason, it needs to be regulated much more than the current account transactions. And for that, prior approval from RBI is often required to conduct these capital account transactions. Prohibitions. FEMA prohibits certain transactions that are detrimental to economic interest. Now, if we take some examples, so remittances which are made out of lottery winning, remittances that are made out of income from racing or riding, those remittances are prohibited in India because that's not legalized over here. Betting, gambling, lottery winning, it's not legalized. So FEMA prohibits these kind of transactions which are not in economical interest of the country. It also restricts the amount of remittance that can be done during a financial year. So, for example, we talked about current account transactions, right? Where you are sending money to your family or your son or daughter for education purpose. So, for that purpose also, the amount of remittance that can be done in a particular financial year, that is restricted. For example, right now, authorized dealers or whom we call as banks, they may freely allow remittances by individuals up to USD 250,000 per financial year, not more than that. The maximum limit is 250,000 for a financial year. So FEMA is also providing the ceiling level, the amount of remittance that can be done during a particular year. Adjudication and appeal. So along with that, because the whole transaction is happening, it is involving different countries, it is forex market, foreign exchanges are involved, different currencies are involved, there is high level of risk and disputes can happen. So FEMA provides adjudicating authorities and appellate tribunals to resolve those disputes, so that their appeals can be listened, can be solved, their appeals can be listened, and a proper solution can be provided, resolving the disputes between the countries related to any forex transaction. Authorized person. So FEMA designates certain individual and entities as authorized person. These can be banks, it can be financial institutions, they can be authorized dealers. Only after getting that designation, the approval from FEMA, they can help in conducting those forex transactions. Now coming to our last slide, which is about violations of FEMA. So violations of FEMA refers to breaches of regulations and provisions outlines in FEMA. So there are provisions and regulations which are defined, and as we learned that FEMA is an act which is a legally implemented by government. So if there is any violation, it will result in penalties, it will result in legal actions. Here are certain examples of the violations. What can be the type of violations related to FEMA norms? It can be non-compliance with the transaction limits. We saw that there are ceiling limits mentioned for a financial year. There should be in compliance with the transaction limits. It should not exceed that. So non-compliance with transaction limit, unauthorized foreign investments, certain sectors they are prohibited. So unauthorized investments cannot be done. Violation of FDI or FPI guidelines, as we saw that even for FPI, KYC norms are mandatory. Registering with SEBI is mandatory. So if there is violation of these guidelines, there should be punishment penalties for it. Money laundering, if someone is trying to convert the illegal money into a legal way, and through these economic procedures and making the inflow of the foreign investments in our country through for illegal money. So it would be violation of FEMA in any step of due diligence of transaction reporting. If that is found out, there can be serious legal actions. Certain transactions are prohibited that cannot be carried out. Contravention of FEMA regulation. There should be no breaches or contravention of the rules and regulations that are set. Holding undisclosed foreign assets. If there are foreign assets hold, that must be disclosed. If there is entities or individuals holding undisclosed foreign assets, again it will result in penalties or actions. Non-repatriation of foreign exchange, transfer of immovable property. So all these are examples of violations of FEMA that can be resulting into penalties and legal actions. So thank you for watching. I hope you learned from this video. If you have any questions, do put me in comments. I'll feel happy to answer your queries. Thank you so much.